Good morning, YouTube. This morning I'm going to take a few minutes and just kind of go through some updates to my investment portfolio and help you understand some moves that I'm taking this morning, why I'm taking those moves, and what they do for me and kind of what the risks I have to manage with those are. So first I'm going to talk about real estate. So the real estate that I'm changing right now is in Rogers, Arkansas, which is a kind of a growing up and coming area. It's not that much known about, but picture, in a few years it's going to be like Plano, Texas, or Austin. You've heard about that, and so those house prices are rising and things right now. So it's difficult to get houses, and so a house went for sale in Rogers, in an area that I have houses already, and it will rent for $13.50 a month. I know that. And so when I go about to make the offer, I determine what I can buy that house for. And I know the issues with the houses because I have houses there. I know the rent rates. I know how to manage them. And so it gives me an advantage so I can buy it at a higher price than another person coming in as a rental. Now, in order to get it, I figured out on one of my houses that I can finance at a different house, put an offer on this house as a cash offer, and then get a house sometimes when my offer is not as high as someone else's because I don't have the same contingencies or same risks on the sale. And so I did that on this house. So at first I was going to buy a house and sell a house. So I did that on this house. And then because I'm going to sell another house, I started, and this is my first I've done, and I'm doing what we call a reverse 1031 exchange, which means that I buy the house, someone puts it in an LLC for a period of time, and then when I sell another house I'm selling, which is just a vacation house I don't use anymore, and then that will go into that same LLC, and when they come out, it'll basically be a swap of houses, so I don't have to pay taxes on the gain. And so this is a tax move. It'll probably save me about $40,000 in taxes right now. And so that is a pushing off of that amount of money. And I did that. I calculated that by taking last year's taxes, adding in gains, and seeing how it affected my total taxability. In Lee Summit, I still have a short sale offer on the house. It's been probably 5 months. I'm not sure if I'll continue that or not because it kind of ties up in my thinking. I have to come up with that amount of money from somewhere to close that house. Let's talk real quick about this. So I'm borrowing $250,000 off of another set of properties that I have, and that payment is going to be $1,500 a month. And so when I look at that, I have to manage a few things. One, I have to manage the debt, the amount of debt that I have. 2, the cash flow and the payment. And 3 is the interest rate and the actual expense on that house. And so that's something that if you follow the steps that I'm talking about to have the savings and the cash rate per month and then the investment build up, that you can work with those things to cover those risks. Now, on house number 5, I figured out that to buy the next house, I just have to finance out the one before it. So you start with one, you finance it out to buy the second one, and you're always one ahead. You can just keep doing it. At some point, your number gets enough. It gets a little bit complicated, but much easier to get access to the cash. And so your questions become, what should your debt to equity ratio across your properties be? What's a conservative number? What happens with that if the property values drop? How much cash flow should you have? How much rent, profit versus what you're paying out in loans? What should that look like? And so those become risks that you have to manage. But there is additional risk that helps with. And so I'll give you an example. Let's say you had $500,000 in houses that you don't live in, okay, because you can't sell if you live in it, okay, and you have a $300,000 in debt. And inflation happens. And inflation happens like it just did at 30%. Well, what happens is your $500,000 house is now worth 30% more because it's measured in dollars and it's valued based on who lives there. And then your $300,000 in debt is now actually 30% less. Now it looks like $300,000, but it's the new $300,000. That's actually maybe $250,000. So you gain 50 on that, and you gain 150 on the inflation. So now you're 200 up. And so I introduced that to say that managing inflation risk is something that most people don't do. Okay? They have a job. Unless the job goes up with the inflation, unless their money goes up with inflation, they actually lose money from inflation every year. It's just like a tax on people. And it doesn't matter if you understand it or not. It's still a tax and a decrease in your salary. And that tax and decrease is then used for the government to spend. So if your regular tax rate is 20% and inflation is 10%, now you're at a 30% tax rate. That's how it works. And if you get into the crypto space, you'll see that inflation rate be planned out, how much they produce crypto, and you have to plan for that within your returns. Now I'll move on a little bit. VIG I would like to own more. It's an index fund. Pays dividends over time of stocks that grow in dividends. Eventually I'm going to sell Fox A. I bought it, got free Disney stock on the Marvel sale, which was great because it was great Avengers movies and things. Walmart stock I am dollar cost averaging into right now. I would like to have 1% of my portfolio be that. Home Depot I will buy if it crashes a lot, but right now it went from $300 to $400 a share, and I've showed you in the video I have some great gains on that. I was experimenting with Coin and Ribbon, and I really don't like owning those. They don't really pay me a dividend. It doesn't feel like something I understand. So eventually I will sell those. I'll probably find a good time to sell over the next year or so, but eventually I'll sell those. And I'll mention something. Most people would sell what they have a gain in, okay, which would be a lot of Home Depot stock. And so if you sell the stocks, your best stocks, over time, you end up with a portfolio of bad stocks. And so you have to consider things other than whether it went up. I mean, the stock doesn't know what price you bought it at. It doesn't know that you have a loss in it. It's valued at what it's valued at. And so you have to consider that and try to sell your losers, not on a whim, but over a period of time, things you don't want to own, and end up with the things you do want to own. And so then you end up with this portfolio of assets that pay you, that are things you want to own. They feel good to you. They're paying you the dividend or the return you want. They're growing how you want. And they're not just a portfolio of things that you can't sell because you think you have $10,000 or $1,000 in this thing and now it's worth $6,000. That's not relevant decision-making process. Businesses, I'm not having to invest a lot of capital in these at this point. I do have to carry some risk of investing, and I have to have some cash in case a large deal comes up. But in general, I'm not having to put new money in there, just circulate, existing money in those things. They're really driven by other factors other than money at this point. New money I have is going into these. Now, with the crash last week, not Saturday, but before that, I bought some Polkadot. Significant discount, about 40% off their high. What will it do? I don't know, but I'm looking to own more of this, and this. Those four, which are kind of the layer 3 level after Ethereum. And so I'm looking at those four, but my main positions are in Ethereum and Bitcoin. Now, I would like to put half the money, 50%, not half the money, but maybe 60%, so let's say 30% in Bitcoin and 30% in Ethereum. But in actuality, this is 2x and this is x, just because of growth. So I'm not going to punish Ethereum because it's grown, right? And so last time it dipped on Saturday, I got up and I put money into Ethereum and Bitcoin. Let's show you that. So if you look at the screen here, I put this much into Bitcoin and Ethereum right there. So you can see those. Now, let me show you the screen. I think I missed that. Screen 3. Okay. So here's my Bitcoin and Ethereum that I put money into on Saturday. I think I got Ethereum at 47.22, and Bitcoin at 47.22 and Ethereum at like 39.44 or something like that, which was a great price to get in at. And I'm still in the mode of buying in to establish a crypto portfolio. I just wanted this morning to cover, what moves I was currently making. Now, I will share one more thing with you this morning. And if you go down here, I shared with you how this GUSD was making 8.25% before, and now it's up to like 9%. And I don't have very much in GUSD just because I feel like the opportunity for growth and return are in Bitcoin and Ethereum. With my Ethereum up double, I'm probably making a net of like 10% there on my Celsius account. But I do like the fact you can pull money out of GUSD. It's closer to cash. It doesn't have the volatility risks. So I will probably, when these two are at a fair valuation, which, for Bitcoin I think is about a little over 100,000, and Ethereum maybe 12,000. Then I will probably stop putting new money into these two. See which of these seems the most promising, and then pump this GUSD and VIG as kind of a 9% return on that, and 1.5% return on VIG as kind of an inflation protected way to, let's say if I do 50-50, that'll end up like a 5% return, and inflation protected 5% return, and then I'll take that money and kind of put that into deferring part of my expenses, so I don't have to take so much money out of investments to do that. Let me know below in the comments if you have any questions about maybe things I'm doing with real estate or with crypto, how I think about which things to buy, which things to sell. My sells and buys are not fast. I will decide what I want to own, and then over time acquire that position based on opportunity. Most of the time I don't feel an urgent need to buy into certain assets. I may have maybe 9 or 10 different things I would like to build, and then I build them in the order that the opportunity arises. So for instance, right now the opportunity is in Ethereum and Bitcoin. I'm trying to build it into them. I'm growing the rental houses in Rogers is my primary growth location, and then I'm establishing Solana, ADA, Polygon, and Polkadot as what do I want to own in the future. Right now the positions in those are relatively small, but I'm watching them, trying to understand where do I want to go. What do I think is going to dominate layer 3 right now? The biggest promise looks like in Solana, and I'll talk a little bit about that in another video, what I'm doing with my Solana in the meantime. Like and subscribe down below. If you need to open like a Blockfi account or some of the other accounts, I provided some links below. If you do that, you get a referral, and I get a referral, which is fine. If you don't, you can just go straight there, but I figure a link's a little easier. I'll talk to you later. Bye.